feeling the pain yet? Man, the overall market today looks pretty decent, right? I mean, the Dow only down 200 points, Nasdaq up 80 points, SPY up like 3 to 4 points. So on the top surface, it looks normal, but when you dig down underneath the surface, find out that a lot of the growth tech stocks are keep getting killed left and right. Some of these stocks tank 40, 50, 60, 70 plus percent from its 52-week high. So in this video, I want to share you guys with my main portfolio performance versus the S&P versus the ARK ETF. And then I'd like to share you guys how am I going to approach this market with a growth tech sell-off. Because again, if you look through my main portfolio, now this is my main portfolio that I extract the data from my broker, and you can see that this is over 5 years of record. Now, if you go here, I mostly trade, or because this is an actively managed portfolio that I manage on not a regular base, but it's more like a swing trade slash investing. You can see right here, it's mostly tech stocks, but lately, tech stocks have been killing, right? I mean, getting slammed left and right. So how did my portfolio handle that? Well, first of all, let's look at the return right here. So right here is all the data that I collected. The percent ever since I created this account back in 2017. Let's scroll down. So I'll start from 0, and then when I end the year, right here, I had it in yellow, easy to see. So 2017, I gained 20%, so on and so on. So this is where the number comes in right here. So let me scroll up. Right here. So 2017, I gained 20%. 2018, I gained 8% versus the SPY and versus the ARK ETF. Then so on and so on. So at 2021, I'm down 12%, unfortunately. The S&P kicked my ass, and then ARK also kicked my ass. But now it's a little bit different. As we can see, what happened to ARK ETF, right? So let me go here real quick and type in ARKK. She currently down quite a bit. Now let's just go to 2 years. So her account has just been down, and meanwhile my account is kind of stagnated a little bit. That because, like I said, I also trade a tech stock, but for me, I recognize the trend, what's going on. So I decided to sell off some of the tech stock or go a bit lighter, So this is what I'm holding in my portfolio. Notice all these positions right here are pretty small, kind of like diversify in a way. But notice something, I don't have a lot of growth tech stock at the moment. If I did, man, my portfolio probably like down here, right? But I don't. And on top of that, I have 38% in cash right now. I'm waiting to buy these tech stock, well, the growth tech stock. So here you can see PAGS, I am down almost 30%, but it's only worth 3% on my portfolio, so it's a small, tiny position. Same thing for CoShare. I'm down almost 30%, and again, a small percentage, only 4%. My biggest one so far is Amazon, Skywork, and Logitech. Well, I would say these two right here, because Logitech I'm still building a position. Hence, I still have this cash right here. Now, I do sell, I do actively manage this portfolio, so I sell and I buy, I sell and I buy. That's why I don't see much gain or much loss, because I do take some losses. So this here, all the transaction that I did. But let me rewind a little bit back to this time frame right here. Because right now, right, the tech sell-off, right? But, no, sorry, let me rephase. Growth tech sell-off. There we go. So it's kind of similar to this right here, right? The only difference was this the entire market, not just the growth stock. So let me show you guys how I handle that situation. So let me scroll down. I highlight it. There we go, right here. So this is January, before COVID. Notice I was buying right here. Market looks good, right? Everything is going up. I was buying little by little, as always. And then more buying. Look at all these buyers right here. Hardly any sell. There's some sell right here, small sell, but not much. But notice February, I buy a lot. And then March, April, on this account, because this is my main one. I have a many account, but on this specific account, look what happened. I stopped buying. You see? So why is that? Well, because stock keep falling. The whole point I'm trying to say is, We don't know. You can see, right? I was buying right here, and then my portfolio just tanked every single day. The point I'm trying to say is we do not know how low these stocks can go. Cheap can become cheaper, right? So that is why it is best just to let it fall. What's the point trying to catch these falling knife when they keep on falling? Agreed? And eventually, when the stock goes up again around May, and especially April and May of 2020, that's when I start actively. Oops, sorry about that. Let me bring it back up. That's when I actively buying and selling again around May on this account. You see what I mean? And of course, the rest is history because I had a very good year in 2020. As you can see, I gained over 140%. But still, again, ARK ETF kicked my ass 156. But don't think about her account with my portfolio is that I recognize. Not I'm saying I'm better than her or anything like that. No, I'm not saying that. What I'm trying to say is I recognize the trend early on around March, and I think March and February, May-ish last year. That's why I got rid of all the you can see my account, right? It also fell among with the market for the growth stock. So I decided, I just want to cut my loss, come back another day when the market rebound. So let's talk about some stocks that I'm watching that I really want to get in, but I just could not pull the trigger yet. For example, Square. Now Square keep on falling and falling and falling for the past, I would say, like what, a couple months already? But on the daily base, all these little bounces that you see right here, these are known as little bull trap, bull trap, bull trap, bull trap. As a knife catcher myself, right? If you watch my live day trading recap video right here, I have 49 video of my live day trading recap. It's all, well, I would say it's pretty much all the same strategy. That is catching a falling knife. The only difference between a day trading and investing is that you use a higher time frame, because day trading, of course, you use in the intraday, right? Investing, swing trading, you use, weekly and monthly. Daily don't really count because it's just too much, fluctuation going on. But if you zoom out to the weekly, we can see a better picture of what is going on. Now, the monthly, even better for those that are investing. We can definitely see what the hell is going on. So you can see right here, right? All these years right here, Square doesn't have much, volume, and suddenly COVID hit, it just bounced back up. But notice this line right here is the moving average. A lot of these stocks, well, likes to stick around the 5 or 6 yearly EMA. I don't believe me? Check this out. See the Q? Since the beginning of time? No, just kidding. But you get the picture, right? See the Q right here? It likes to hug on this white moving average, which is the 6 yearly EMA. But notice something right here. Look how far it is. It's pretty far, right? What is that saying? We may have a major correction coming. We just don't know when, but it is coming. So as you can see on the weekly chart, right? A bunch of lower high, lower high, lower high, lower high, lower high, lower high, lower high. You get the idea, right? A bunch of lower highs. What is the point in trying to catch it? You're just gonna get killed. Now I saw a YouTuber. I don't want to mention his name. He probably seen my video. I don't know, but he showed us on YouTube his P&L that he tried to catch Baba, and I don't want to show the screenshot because I kind of don't want to embarrass him, but he was trying to catch it in the mid 250s right here on his P&L screenshot. He's buying here, buying it here, buying it here. He bought like 10, 15 times. No, 10 times. 15 a little too exaggerating, but over 10 times. Eventually, he pulled the plug right here. The point I'm trying to say is he's trying to catch a falling knife. Remember the old saying, do not try to catch a falling knife. Let it fall. Wait for reversal and wait for confirmation. But you need to do in a high time frame. Like the yearly chart counts too, but preferably the monthly chart, especially for those investing, because you can see the bigger picture and you want the best deal as possible, right, to maximize your profit. So you can see Baba, this is a bunch of lower highs. Right now, as we can see, for the month of January is a higher high and higher low. It looks very attractive, right? But no, we need the confirmation. So we need several more months to go. Do not jump in right in. It could be a little bounce and then back down to the 60s and 50s. Who knows, right? But obviously the next resistance right here, right? 146 on the monthly chart for Alibaba. Another stock that I've been watching that I do have a position is PayPal. Same scenario. I bought, so where my PayPal at? I'm down too. I'm down 12% on PayPal. I jumped in around low 200. So let me show you what I mean by that. So I go up here, zoom up, PayPal right here. See? Boom. I bought in November at 202, and I'm down ever since. I am down 12% with 3%. Now notice something. I have not added any more. PayPal right now is at 170, 180. See, I bought it right here, and I still have not added in yet because 12% for me is too close to my entry. I don't want to buy it yet. So it would be amazing if PayPal can fall down to here. Now you probably think, are you crazy? Well, check it out. Check out the RSI. Check out the Stochastic on the monthly chart. I have to remind the viewer this is a monthly chart, not daily chart. What is it doing? It's sloping down, sloping down. It's not even curving like this yet. The curve right here. You know how? Because this move like sine wave, right? Sine and cosine wave, up and down, up and down. Right now it's on the way down. So the first resistance obviously is right here. You can see, right? 160. The green moving average right here is the 50 monthly EMA. After that, I don't know, hold or not, we will see. If it breaks, boom, next stop 120. This is where I'm gonna buy some more share, maybe another 3% or something. Then I will have 6% of PayPal in my portfolio. The whole point I'm trying to say is, do not catch a falling knife, especially if you want to average cost down. You average down too close to your entry. Let it fall like 50%, then average down 20%, 30%. It's okay to average down, but it could fall a bit more, like it did, right? The point I'm trying to say is you wanna have reserve for buying power just in case it fall like crazy. Another one is ROKU. See this thing? It went from almost 500 down to like 180. How low can it go? It can go a lot low. Look, it's still sloping down. Next stop is right here. Well, it's already right there. Pretty cool, huh? Next stop right here. Can it fall down to 100? Absolutely, it could fall down to 100. It's still sloping down. We don't know how low it can go. Now, imagine this quarter, they miss earning. This thing moves quickly. You see the monthly chart? It moved like a month. It moved like 50 bucks. So it can sure go down to 100, no doubt, if it miss earning or whatever, in the next following months. The next stock that I see is Zoom. Same thing. See a bunch of lower highs and lower highs. It's still falling, but how low can it go? Well, it looks like next stop is right here. 140. After that, right here. Can it go down to here? Absolutely. Resistance, pretty obvious right here, right? So just be aware of that. Another one, not popular among YouTubers, is TDOC. I think this is Kathy number 2 or number 3 holding, which is pretty significant for a portfolio to hold. Now it hit this already. Pretty cool, right? On the monthly chart again. Now it's not even curving up yet. It's still sloping down, but like this. I want this thing to curve back up like that, And then I decide, and then I maybe nibble some shares. But right now it's like a falling knife. Next stop is right here, kind of obvious. Can I go down to here? Absolutely. Just have to wait a matter of time. Okay, let's go some more example. A very popular one among YouTuber, Palantir, PLTR. Now PLTR have been consolidating for a very long time now. Right now it finally decided to break down, very obviously, right? Around here and around right here, the 22, 21-ish. Consolidate for a year and a half. Now it finally decided to break down. Again, monthly chart, lower high, lower high, lower low, lower low. How low can it go? I don't know, maybe 15, 10, who knows, right? But as for now, it's still a falling knife. Resistance, very obvious, 20 bucks around there, All right, last one. TTCF, again, this is very popular among YouTubers. Hey, check it out. Pretty cool, right? So it lands right on 1350 and a bounce. Notice right here is very obvious. The next one is right here. Can it go down to 10 bucks? Absolutely it can. It hit right here, right here. If I continue on, there we go, see? It's gonna fall down this range? Of course. So I think one thing that investors nowadays lack of lack of is this right here. Yeah, patience. Patience. Wait. What's the point of jumping in when the darn thing keep on falling, right? So just let it fall. Eventually, it will bounce, but you have to be very careful. You want to catch a falling knife when it's micro bounce. Remember, there's two type of falling knife. Well, eventually these stock will bounce, no doubt. But there's a rubber ball bounce and there's a dead cat bounce. We want to catch the rubber ball bounce, not the dead cat bounce. Those are known as bull traps, by the way. So just be patient. Eventually, these stocks will bounce. It's just a matter of a couple of months from now or next several quarters from now, but who knows? Let me give one example, a very good one that has been falling for a very long time. Like this right here, has a major run up, and it consolidate for several months. Remember, there's a monthly chart, and then it just kept falling. You see. So the point I'm trying to say is, this thing can go sideways for a very long time, a year, year and a half, 2 years, who knows? But just wait for the confirmation. Well, first of all, wait for the reversal signal, plus a confirmation, and enter at a higher high on a monthly chart. That would give you a higher probability that these stocks are going to recover and up to the upside. Now, before I close, I want to address this real quick on the QQQ on the higher time frame, the monthly chart. Sorry, the yearly chart. Kind of repeating myself, but you get the idea. You know, QQQ likes to hug around this moving average like for years already, not just new. See how far we are from it? From here down to here, that's roughly 20% correction. Can it happen? Absolutely. When that does happen, guess where all these high flying growth stocks gonna go? Gonna go down even more. So just be aware of that. So when you average your cost down, nibble shares by little. Don't go all in at one time. All right. Hopefully you guys have a wonderful week, and I'll see you guys on the next one. Bye.